In November 2025, the tech industry faced significant challenges as major stocks experienced considerable declines. Supermicro Computer and Oracle Corp headlined a growing list of the worst performing tech stocks, witnessing month to date declines of as much as 37%. These downturns come as the once promising AI trade began to fizzle, leading to widespread investor concerns about the future of technology companies that had geared up significantly for artificial intelligence advancements. 63 out of 84 major tech stocks reported declines by the end of the month, a stark illustration of market volatility. Supermicro Computer, in particular, saw its shares plummet by 36.8% due to mounting margin pressures stemming from fierce competition and rising operational costs. Despite a booming demand for AI related products, the company struggled to maintain its profitability. Analysts expressed concern regarding the vague timeline for recovery, leaving investors feeling wary and uncertain about the company's future. Oracle Corp, on the other hand, faced scrutiny regarding its reliance on OpenAI to meet future business targets. After an initial surge in stock value following the announcement of a new partnership with OpenAI earlier in the fall, its stock value diminished as doubts about OpenAI's commitment grew. Investors questioned whether Oracle had overleveraged itself in anticipation of new business opportunities that might not materialize. This unrest was reflected in the increasing costs of insuring Oracle's debt, a sign that the market had begun to recognize the risks associated with the company's heavy borrowing. Amidst all of this apprehension, other significant tech players like Palantir Technologies and Advanced Micro Devices also felt the strain. Palantir stock saw a decline of 17.3% for the month, a reaction to investors reassessing its elevated valuation. Despite this, the stock had more than doubled over the year, showing how volatile sentiment can shift rapidly in the tech sector. Advanced Micro Devices similarly faced a challenging month with its stock declining by 16.4%, marking a potential worst monthly performance in 3 years. The markets clearly reflected a heightened level of scrutiny around artificial intelligence companies, with investors starting to think critically about valuations and growth prospects in a sector previously rife with enthusiasm. Arista Networks was not spared from the downturn either, as it saw its shares drop by 19.1% amidst concerns regarding decelerating growth and rising competitive pressures. It became evident that the AI boom was becoming a double edged sword, as many stocks that had benefited from hype now faced a harsh reality check. Even companies like Strategy Inc. and DoorDash, which were not directly tied to AI, suffered due to shifts in investor sentiment. Strategy Inc. experienced a staggering decline of 34.8% as Bitcoin prices fell, reflecting the broader trend of risk aversion in the market. Meanwhile, rising expenses at DoorDash led to a record one-day loss, underscoring the tension between corporate investments and market expectations. Overall, the S&P 500 index saw slight declines in November, with the information technology sector leading the way down with a 4.8% downturn. Despite these recent struggles, the tech sector had seen an impressive increase of 23.7% over the course of 2025, indicating that while the month brought significant challenges, the long-term outlook for technology investments might still hold promise.